Good morning and welcome. Patriot Radio News Hour. Joe and Jason on this Friday. Jason will be here in just a minute. He's on a phone call. Speaking of phone calls, our toll-free number 800-951-0592. The website at allamericangold.com. And, man, 2025 looking a lot like 2024. Every time you turn around, it's something different, whether it's L.A. burning up, insurers now facing problems over there. We've got this jobs report that came out today. Big number, well above expectations. The 10-year note, the bond market, we've had a lot of bond market issues. And what is it? It's the 10th? It's the 10th. All over the world, seemingly. The 10-year note flying today. The Dow, the NASDAQ, the S&P are getting absolutely jackhammered. Gold, telling you, it's a place you're going to want to be as all of this continues to unfold here. We have really an economy that is it's not bad, right? It's got too much money in it, and consequently, we're going to have a lot of inflation. It's just what is happening in the amount of debt. So think about like next week. Next week, we got debt ceiling. I'm going to have to start talking about that. What are we going to do? What's going to happen? Obviously, this Congress isn't going to do anything. They're not going to do anything. The inauguration, right, that's still, another week away after next week. And so we'll be on these emergency measures. You're going to see a lot more pressure in bond markets. We're getting closer and closer to that 5% number, the 10-year note. I think that's kind of like, boy, I hope we hold that line. I don't think we will. I actually think we're going to have even higher yields. I know that doesn't make anybody happy, but that's what it is. Remember, in this kind of environment, the yields will go as high as they need to cause the next crisis. Because, listen, you only got two choices. Inflation will end when everybody gets fired, period. That's it. End of story. Didn't happen in December. Red hot jobs number consensus was 165. Okay, 165,000 jobs. I love this. The whisper number, was 187. So people were saying, hey, we think 165. We actually think it'll be higher than 165, but we don't want to say it. So we'll whisper it. I don't know what that is. 256,000 jobs created. Of course, we know seasonally adjusted, but that was 100,000, just under 100,000 more than what people were expecting. And listen, there was the vast majority of them were thinking it was going to be less than 150,000. By the way, October was revised up by 7,000. So it wasn't a lot, but at least one of the few revisions up. And then, of course, November was revised down, which is what we've been used to seeing, about 15,000. So not a big move in the revisions. So, that's pretty good. The unemployment rate, 4.1%. The number of employed workers, 161,183,000. And the number of unemployed workers fell by 250,000. So really in this whole thing, Nothing good if you're looking for lower rates in this whole jobs report. We've already had a couple of members of the Federal Reserve now come out and say, Jason, that's it. December, that was the last rate cut, and we're not going to see very many rate cuts, if any at all, in 2025. That remains to be seen. Right? That remains to be seen. And I only say that because they're not going to cut rates because they're trying to fight inflation, obviously. But they may feel like they're forced to cut rates to try to keep, the growth strategy. We're going to try to grow our way out of its strategy. The problem is the bond market, it won't help them, right? Because every time the Fed lowers rates, the 10-year note goes higher lately, Jason.
Yeah, it's going to be interesting, isn't it? I think they're going to lower rates more. I think they want to lower the rates, and that inflation's going to start popping back up. And then I think they're. I don't. It might be insane to think it, but they might just go back up on the rates. So they got to lower it until the inflation shows, and then they have the excuse to raise it, right, Joe? And then crash and burn. I mean, I think they raise the rates, crash and burn, right? Crash and burn. And I was just watching some stuff on how overbloated the markets really are. And I was just looking at some information. You look at the totality of some of these overpriced companies on the stock exchange, like Tesla, and it's like, man, this is the biggest stock market bubble ever, Joe.
Put it this way, we're passing irrational exuberance. Remember that line? We'll be back right after the break. 800-951-0592. A quick look in at the markets here. The Dow's down 650 points right now. The NASDAQ is down 400 points. The S&P is down 100 points. The 10-year note, big move to the upside, 475, got right up to 480 earlier when the jobs number first came out. And I, again, expect rates to go even higher. For the very first time, we had a 20-year note auction yielding over 5%. We haven't seen that since, 2007, before everything fell apart. The big move, another big move in oil. I don't know what's going on with oil. I guess they're saying that they expect when Trump comes in that we're going to start enforcing the Russian oil sanctions. If that's true, which I haven't heard that, haven't seen that, but that's what they're kind of highlighting, that's going to push oil. I mean, we'll go back to $90. So I guess fill up while you can. Right now, oil off the highs, but up 2% today. 75.5. It's been as high as $77. By the way, natural gas. It's cold in most of the U.S. Up 6.5% today, almost $4. Natural gas, so people are going to start paying more. Right now, gold's up 22, 26.94. It's been as high as over 2,700. Silver up about 30 cents right now, just below $30.50. And I'll just say this. They're worried. Silver's kind of been kept under wraps. Has to do with the tariffs, right? They're worried with the tariffs about silver. Don't be. I'll just tell you right now, don't be. That's not going to do anything, but you do need to get diversified here. Have you not figured it out yet? Have you not? Rates are not going lower. I think Jason and I both agree. I think the Fed will cut rates this year. despite inflation. Why? Because the losses are staggering. Did you see about Bank of America? Unrealized loss. You know, they're all playing this unrealized losses game. It is incredible. Hundreds and hundreds of billions of dollars that these banks have no chance of ever doing anything with, and all they're doing is, well, we're going to wait another year. Wait, can we get another year? We needed this to turn around. It's not turning around. It's not turning around. I want it to. Donald Trump's going to do everything he can to make it happen. He will. I guarantee it. He absolutely will. Which is why they're going to cut rates, even though they say they're not. Doesn't matter, because the yields will keep going higher. On top of that, the debt is going to explode again. On top of that, quantitative easing is coming back, I think, with a vengeance. And, Jason, I think we're going to see it everywhere. Right? Already. South Korea's had to intervene in their markets. Japan's had to intervene in their markets. Yesterday, the UK intervened in their markets. France, Germany. It's just a matter of time.
Yeah, tariffs instead of taxes, right, Joe? It's going to be tariffs instead of taxes. That's the way that Trump won't look bad when the cost of everything goes up. It'll be like it's those darn Chinese. I mean, the Chinese build a car that, and I've never driven it, so I can't say it, but from what I'm looking at, maybe superior to the Toyota. I like driving Toyotas because they're cheap and you can beat them up, and they go for 250,000 miles before the transmission shows problems. The Chinese build cars, but there's tariffs that are so huge they'll never come to this country. And from what I understand, they're pretty for the value. I mean, if we got them here without the tariffs, Joe, some of these cars would be like $5,000 to $7,000. And then they probably go 150,000 miles before they break. And you look at the dollar versus a Corolla, which is what I buy. So things are broken. They don't want these items coming here. It's not going to help. So tariffs instead of taxes, Joe.
China's the largest car builder in the world. It's not even close. I think, and don't quote me on this percentage, it's close. They make over half the cars in the entire world. That's where it's at. Matter of fact, ask the CEO of Ford. He paid the tariff. He's driving this Chinese EV, and he says, dude, I'm not giving it up. Right? I'm not giving it up. It's a great car. Yeah. Listen, this isn't, the idea that they build crappy stuff, that's not really true. It really isn't now. Well, it's global. Let's face it. They get all of the specs from our own companies, right? And we basically, here's the roadmap, right? Just follow the directions, right? And you're going to build the great quality stuff. And that's really, listen, it's just like the cars you buy that come from Mexico. They're great. They're great.
All you have to do is buy a Toyota and tear it apart and say, okay, let's make something that's better than that. I mean, that's all you have to do. And then you have to make it cheaper. And I'm guessing Chinese labor is still cheaper than Japanese labor. And so the car is probably same quality. I'll just say probably same quality, Joe, but it costs you a whole lot less. So America has to protect its companies. I'm actually for it, protecting American companies. But our American car manufacturers aren't making a lot of it in the United States anymore. So what are we really protecting, Joe, right?
Yeah. And I'll just say this. It's the manufacturing stuff, it's not coming back here. Now, you can impose tariffs on different countries. They'll just move somewhere else that doesn't have the tariff. But anybody under the illusion that it's all going to come back here, you're sadly mistaken. And I don't say that to be mean. That's just how the global economy works, right? They're not going to come back here. 'Cause let's face it, when you look at, okay, where's the most expensive place to build stuff? Right here, right? And there's other places that are equally as expensive, but we're right at the top of the list. And it's not just because you got to pay people more, right? You got to deal with all the regulation, all the government stuff. Listen, we've got this mega chip plant thing that we're going to have like a chip plant city. And it's awesome here. It's literally just 3-4 miles up from my office. We had to give Taiwan Semi half of the money to build this stuff. They're like, hey, it's going to be $12 billion. Okay, well, we'll give you 6. Right? How about if we pay for half? And then on top of it, right, Phoenix steps up. Oh, we'll give you tax breaks and rebates and this, right? I mean, at the end of the day, that's the only way we get those type of jobs back. Is if we want to go out and pay for it to come back. I mean, and that's it. And of course, I think it's smart because that's high technology stuff. We want to make sure that if China ever decides to cut people off, we can build it here, all that stuff, blah, 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 blah. But, Jason, that's the only way it's happening. And unfortunately, this is the path. It's not Donald Trump's fault. I'm going to tell you right now, it's not his fault. He is at the mercy of the central bank. The central bank decided to hell with economic policy. They threw economic policy out after the dot-com bubble burst. They just threw it out the door. They did. They just threw it out the window and said, the hell with it. That's what's happened, Jason. And now it doesn't matter whether it was Obama, Biden, Trump, right? It doesn't matter. They put us in this situation. Let's not forget. The Federal Reserve is already. They have losses of hundreds of billions of dollars. They just we'll pay it back later sometime. These banks, though, Jason, it's a different world. Ally Financial warning again. We've been talking to you about Ally for a while. Hey, watch out here. They got 11,000 employees. They're saying that job cuts, they're going to get out of mortgage originations completely and considering strategic alternatives for its credit card business as borrowers continue to struggle to pay down costly debt. So, Jason, I think this is the other thing that we're going to see in 2025. All of these banks, they played a lot of tricks to not have to pay the piper in 2024 with the illusion that rates were going to be a lot cheaper in 2025, and it's not going to happen.
It's broken. The whole thing is completely broken. Joe has told many times, and I want to play a short clip here. I don't know if I'll do it this segment or next segment, but about how overbought and how big the stock market bubble is. I'll add to that. You've heard of, Joe, I'm sure you've seen this. It's been going on the last few months. Fart coin. Have you watched Fart coin? Fart coin. We'll describe that maybe the next segment, but the stock market is the same as that ridiculous coin that everyone's buying because it has the funny name. Fart coin, it doesn't even have any of the utility that Bitcoin has or some of these other cryptos. It's just being bought as a place to store value, and people are gambling. And, Joe, we know what happens when the gambling gets to its zenith, like the 2008 housing crash. Look at the gamble. That was gambling. That was mortgage-backed securities. They were being packaged together at breakneck speed, and they were putting homes in there that had no business being in AAA-rated products. The ratings industries looked away because they were making all kinds of money because this is what everyone was putting their money into, and then it blew up. And we're heading for that, Joe. We're heading for it this time with inflation. At least in 2008, you had the 2% inflation thing, right? We don't even know what inflation really is.
Right.
I don't think they're giving us the real numbers. 10%?
If we can just get to, if we can just get to 2% inflation, remember, that was the nonsense that was occurring then. And I think that's the difference maker, right? Which is, wait a minute, the Fed just cut a whole full basis point. They cut a full basis point. And now the yields are what? 1.25 higher, right? And getting ready to go even higher than that. That's not how the market was supposed to work.
It might be showing that the market's actually going to work, Joe. It might be showing that the market's actually starting to work.
It is now, right? That's what I'm saying. The yield curve uninverted. I know nobody wants to talk about it.
I mean, in this clip, Joe, and it's Ben Norton. Ben Norton, I usually put him on the Happy to Cup of Joe because he's telling you why Trump is not a good idea. But he does economics. I don't put that stuff on very much, but he uses the word to describe. He has an example of why the markets are overblown. He uses the word how cartoonish the markets are. I love the description. The markets are cartoonish. Who wants to have their money in this stuff, Joe, when it's getting ready to blow, right?
We'll be back.
Patriot Radio News Hour on a Friday. Let me get into this clip, Joe, and then I got something else to add because he's going to tell you what Joe's been telling you for years about especially the last few years, how overblown some of these big stocks are. So I don't want to go through the whole thing, but then he gives an example that everybody should understand. He goes into Tesla, and then I want to give you a few facts behind that to show you how manipulated and bad this is, and why you guys should be getting out of this paper stuff. Take your profit sharing on Bitcoin, buy gold and silver from Patriot. You're going to be, even if gold goes down when the markets crash, the premiums are going to go skyrocketing up. The real holding of gold is, the physical end is going to be where you need to be. But listen to Ben Norton for about 2 minutes. Listen to this.
NVIDIA, Amazon, Meta, Tesla, Broadcom, Alphabet, and Berkshire Hathaway together represent 37.6% of the weight of the entire S&P 500. And the list of the top 10 companies in the MSCI World Index is basically the same. The top 10 companies are U.S. monopolies that represent 26.3% of the entire global index managed by Morgan Stanley Capital International. If you want to get an idea of just how cartoonishly overvalued U.S. companies are, look at the market capitalization of Tesla. In 2021, Tesla's market cap was $1 trillion, making it larger than all of the following market caps of these companies combined: Toyota, Volkswagen, BYD, Daimler, GM, BMW, Ford, Stellantis, Honda, and SAIC, all of them combined, had a slightly smaller market cap than Tesla, a single car company. Now, Tesla's stock price has been very volatile because it's basically a speculative financial investment. This is not based on the fundamentals of the company. People invest in Tesla because of Elon Musk, the CEO, and especially now that he will have a senior role in the Trump administration. After Trump won the 2024 presidential election, Tesla's stock once again skyrocketed. And as of January 2024, the stock was around $380, which is roughly the same level as the previous peak in late 2021, which was when Tesla's market cap was larger than the market cap of the 10 large car manufacturers around the world combined.
Okay, so Joe, I didn't get it. I'm going to skip the last thing he says. Like, look, Tesla made less than 1 million cars last year. Toyota made 10 million cars last year, and yet Tesla's value is more than the top 10 other car companies that are actually making cars and selling cars. That's why he uses the word cartoonish. And then I looked. I was just because I know that we know Musk sold a bunch of Tesla stock in 2022, and I was looking it up. From April to December of 2022, Musk sold $23 billion worth of Tesla stock. Obviously, a lot of that was to, I'm going to say this, jump ship and get onto Twitter and go into a new business. Elon Musk is brilliant on pumping up something like Fartcoin, which we may talk about, Joe, and then getting off when he knows it's going to sink. How do we know that Tesla stock's going to sink? What about Bill Gates? This is a December 13 report, shorting $250 per share Tesla stock. He's shorted 10 million shares of Tesla stock. I don't think Bill Gates is the kind of guy that's going to lose, billions of dollars, right, Joe, by shorting something that he sees is really bad. And look, what you've heard the whole thing, there's no such thing as bad press, right, Joe? Blowing up a Cybertruck on January 1st doesn't do anything but keep people interested in buying Tesla stock. This thing is going to crash so bad, and when it does, I don't know if it's this year, I don't know if it's 2026, it's going to crash. The value of these things are going to equalize at some point, and you're going to be so much happier if you would just profit share your Bitcoin or your Fartcoin or your Tesla stock and stick it in gold. And I highly suggest you do it now, because I've talked to some people recently trying to move out of some of this stuff, and it's getting a little harder, Joe, to move out of this stuff.
Yeah. Right now, the Dow now down over 700 points. The S&P down 110. The NASDAQ down 430 points, and it's all about bond yields continuing to go higher. Gold right below $2,700. $20 gold pieces today, $27.95. Still really good. Not as great as that deal that we read earlier in the week. By the way, congratulations to all you people that were able to take advantage of that opportunity. But this is something, like I said, I think this is a convergence here. We have so many things happening right around Trump's inauguration. We have the debt ceiling. So we're going to be in what they call emergency measures. Well, and how far can you go with emergency measures? I don't know, 60 days or so, right? We had Fitch already come out and warn. We have no budget, so these continuing resolutions, right? Those are also in that same 60-day time period. Also, we have the Treasury that needs to announce how much bigger these auctions need to be. And then on top of that, I think what we're going to get is, oh, by the way, we're going to have to do it again in 3 to 6 months, right? Somewhere in that time period. So it's kind of like, yep, we're going to raise it, but then we got to do it again. At the same time, we expect, right, a healthy dose of tariffs. We expect deportations to start coming in. We also now apparently expecting, at least if nothing else, heavy enforcement up to new sanctions on Russian energy. We're already seeing, natural gas, a lot of it, Ukraine shut the gas off, and now it's super cold here in the U.S., and we're seeing natural gas prices react. These are all things, Jason, I think that are going to be they're going to be impactful. People are going to feel it. They're going to know it. Let's not kid ourselves. That fire in California, it was so big. I mean, they talk about 10,000 structures gone. And it's not done yet. But all those people need businesses got to be rebuilt. People need places to live. How many cars burnt to the ground? Right? They got to get rebought. Insurance premiums are going to go through the roof. It's going to be buckle up here. Get your gold. Well, it's still under $3,000. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up on this Friday. I'll just say that a remarkable week. Really, really remarkable what we have seen in really the first 2 weeks of this year. And the news coming out, Donald Trump has been sentenced in this was the hush money trial. Trump has already said he's going to appeal, but here was the verdict, which was a unconditional discharge, which places a judgment of guilt on Trump's permanent record, but comes with no jail time and no other legal penalties. So essentially, we're going to just say you were guilty, but that's it. No jail, no fines, no penalties of any sort. Kind of a weird thing. I guess they wanted the guilty verdict, right? So they got what they wanted. But Trump says he's still going to appeal it anyway, even though it was no jail time, no fines, no penalties, just guilty.
Does a conviction with no penalty really affect that guy at all? Why do I get the feeling as president he can expunge that whole thing? I mean, really, it's in the public square, so as long as he's not going to jail, it holds no weight. Once again, there's no such thing as bad press, right, Joe?
Right.
It gives him that gangster image that he likes to have sometimes. So it doesn't mean anything unless he actually had to, I guess, pay something or actually go out and pick up trash for a couple hours. I don't know if it really holds any weight, right, Joe?
Right. Yeah, I don't know. The circus of that stuff continues. And again, it's a circus. It's another example of pettiness.
I'm just imagining, Joe, I have to say, I'm imagining the orange-faced guy with the orange vest picking up trash with the little stick with all the press around it, maybe
he could do like the old Indian guy with the horse and the tear, right? Redo that one. That would be awesome. But, right now, gold's up $23 here, $26.95. Silver's up 40 cents, $30.50, as the jobs number came in hotter than expected, really and the whole thing. A pretty strong report, which was exactly what Wall Street didn't want, which is driving rates even higher. It's going to be, like I said, I think this is going to be it's going to be a very interesting year. I don't know. We said last year was the year of chaos. This year already, Jason, looks like I think we're going to see an incredible amount of volatility, and it's going to jump around. There's going to be this hot spot, then that hot spot, then this hot spot. Now worries about the insurers in California. The big ones, I think, are going to be okay. Allstate, State Farm, I think they're going to be just fine. Travelers, Chubb, they're all, got some things to worry about, but it's Mercury General. If you're going to have one that goes, this is the one that I think may be in big trouble here. They are centered in California. Their stock's down about 40%. 80% of its premiums were derived from California, they have by far the most exposed insurance company to the fires that are burning in Los Angeles. And now, every time we turn around, these estimates keep getting bigger and bigger and bigger. They're saying could be up to $150 billion. Now, that's total with economic and this and that, but that doesn't mean that's not insured, right? That's not insured. But it does look like insured losses could be well north of $20 billion. But Mercury General, Jason, I think this is the one we're going to need to watch as to whether or not they're going to be able to stay. And, of course, this will be a huge problem in the insurance industry because they dominate in California. And it's going to be, I don't know, I don't want to say impossible, but getting insurance in California is going to be a major problem.
Interesting to be a fly on the wall in some of these insurance boardrooms. See what they're saying, what kind of damage control they're attempting, or what kind of game plan they're cooking up, right?
Yeah, well, something. Listen, we don't want this to happen. I hope Mercury General has a plan. Maybe somebody's going to come in and bail them out, or give them access to a lot more cash or something to that effect. I don't know. And then President Biden telling California they're going to pay for everything. So, yep, our federal government, don't worry, we'll pay for all the firefighting you need. Patriot Radio News Hour. Final segment, $20 gold pieces, $2,795 at 800-951-059. 800-951-0592. Patriot Radio News Hour. Joe and Jason wrapping up the week here. $2,797 gold, been over $2,700 earlier today. Don't be surprised. Close. This is more a psychological level, a clear bullish momentum in the gold market. Silver up 43 cents, 30.52. Silver also got right up to almost to $31. That's an important level for silver. We're going to watch $31. That will be an important level, but a close above 30.50 will go a long way there. But 31, at 31, I expect that you're going to see silver kind of respond and challenge that. You go back to challenging that 35, but they got to get through 31. There's a resistance there. Gold, on the other hand, right now, the resistance level will be the all-time high, right? That all-time high near $2,800 is going to be that level. And we knew at some point that gold was going to start ignoring the higher interest rates. And look at today as a prime example. Look at this week as a really good example of gold now saying, yeah, the higher these rates go, the more the big money is going to hedge themselves with gold. Jason, that's exactly what we're seeing right now.
And just for the audience, because we're getting a little separation between the two indexes, because we got nearly just a little under 2,700 on one, but then we got the I guess it would be the further down contract 2726 on the other. So
yeah, that's the February gold contract that you're going to see on TV. So if you're watching on TV, you're going to see 2726. And by the way, the silver contract 31, almost 31.50. So a much higher silver price on that contract, which is a March contract. So, again, they're anticipating, here's what I'm anticipating, that gap's going to close real fast here. You're going to see silver close up real fast here on that as well. And like Jason said on gold, already February gold, we're already 27.27, and I think really for gold people, we're going to watch 27.50. You break 27.50, then we're going to talk about, okay, are we going to go through 2800?
Yeah, I think 27.80 was somewhere around the high.
Yep.
And so 2800. Joe and I don't know for sure what this is going to actually, how it's going to happen. So we can't say it's for sure going to blow through because there's the winds of change are coming. But we can say this: if it does break that 27.80, and especially 2800, it really doesn't look like it would take much to go to 3,000 at all.
Yeah. Well. That could just be a rating agency downgrade, right? That could be, depending how this debt ceiling goes, the fear is they're going to take it down to the wire, right? And take it down to, oh, my gosh, right? The emergency measures, we're going to be done on a Friday, and it's Wednesday, and they still don't have a deal. I wish it would go quick. Right? That's our hope. Our hope is don't mess around and get it raised and do it quickly. Unfortunately, that hasn't been the experience. 800-951-0592. $20 gold pieces, $27.95. Jason and I were coming right back.